Per usual, on this channel is for educational purposes only and is not intended as financial advice. It is Wednesday. That means it's altcoin day. Now, there are tons of different ways you can slice this cat. For me personally, I like a set it and forget it approach. So I'll talk about how to tackle that at the end. Talk about some TA in the middle. But if I'm trying to figure out what even to look at, one of the places to start is something like, a basic screener. This is just sorting performance over the past month against USD, and then, right, you can change the market cap. Some people like the quote unquote low cap gems or whatever, sub a million. I don't even know what market cap you'd even consider or look at. But there have been a lot of alts that have done really well over the past month, relatively speaking. Now, let's say there's 10,000 alts and maybe 40 of them outperform Bitcoin or something, right? It's not a large number, but a decent amount have done decently well. So take a look at some of those. But broadly, dominance is still dominating. Bitcoin is still winning. There is still money broadly being hoovered up by Bitcoin, directly or indirectly. Technicals for dominance still look bullish to me. There's always a risk at some sort of mean reversion when you have a TKC clamp like this. We're not even out of the weekly cloud yet. Really, realistically, we haven't been above the weekly cloud since 2016. I mean, since the inception of Bitcoin dominance, because of the way the denominator works, right? You and I can create any coin we want, get it listed, have it trading, and that's plugged into this. So you can curate your own dominance. TradingView, I think, does like the top 100 coins or something. I can't remember. Anyway, point is, this is definitely one of the more bullish periods of dominance. Similar to 2019, we came out of the weekly cloud, didn't really go anywhere after that. But if there's any time to want to hold on to Bitcoin more than alts in general, it's going to be now when we have flows potentially coming directly via ETFs. If we look at the altcoin index, still ranging, definitely at the top of the range, which is good if you're bullish alts. We're still getting tether prints, which is good if you're bullish alts. For the most part, stablecoin liquidity is directly responsible for altcoin moves, especially alts that don't have, like external access to liquidity like Thor, IMX, INJ. I can't believe IOTA is still a thing. Elrond, right? Some of this stuff is purely in the ecosystem. It doesn't really have a large USD pair presence or inflows. I'm guessing, DOGE definitely does through Robinhood, but there are things on this list that rely upon stablecoin liquidity almost directly, right? And nothing else. So it's definitely important to see Tether continuing to rise up there. If you're bullish alts, right? Again, I keep saying that, but I assume if you're watching this video, you wouldn't be bearish alts because you know what I'm going to say. BNB has survived. They've survived the news. They've survived the great CZ stepping down and or potentially going to jail. I mean, who'd have thought we'd see that coming? But the token has still held up above 200. I wouldn't touch it. I wouldn't touch any token of any exchange. I think the risk is massive. There's attack risk on the exchange. There's custodial risk on the exchange. There's regulatory risk on the exchange. It's just not worth it for me. I get it. A lot of people make a lot of money trading some of this stuff, but that's my risk spiel. The chart itself still doesn't exactly look bullish. This could still break down eventually here. But largely this cycle, I don't really expect BNB to be part of the conversation, especially with all of the alternative layer 2s to compete against BSC. One of the reasons why BSC took off and the associated ecosystem was because of Ethereum fees getting too hot to handle during DeFi mania, NFT mania, whatever you want to call it. Now we have layer 2s, we've got Solana, we've got other stuff. I'm sure BSC will do fine, but I don't think it's going to be the dominant player that it was when ETH was running scorching hot. The other thing to remember is the entire ecosystem is sort of at the whim of Bitcoin. Bitcoin looks decently okay. I think it's going to break up. Might take another week or two into December, but this looks like a chart that actually does want to break up, and that's good for alts because really they just need Bitcoin not to break down. If this does break down, if this does break 36.7, I think for me personally, if I have any active leveraged alt positions, they're all cut. That's it. Okay. Because you risk 35, 34, 32, 33, right? 32 is the ultimate level that I'd want to see on a daily retracement, but I would much rather get stopped out at 36.7 on everything than worry about holding through any volatility there, because I know the downside is potentially pretty considerable for Bitcoin. But I do like longs up here at this level for Bitcoin, even if this goes back to the diag and tries again, right? It doesn't matter. Like, it looks good enough to me at this point that I do think this breaks up, and that's what you want to see for alts. ETH, I have nothing new to say till it makes higher highs. You know, look, it's going to 3K. The question is when. The question is 3K by April or 3K by November 2024. You know, how lagging can this possibly get? I don't know. The TA hasn't changed in months ever since it survived the breakdown test here. If this makes another lower low, 1500, you know, then the idea is null and void. But for the most part, that hasn't changed. ETH BTC also hasn't changed. This is going lower. I don't know what to tell you. And if it doesn't go lower, it's not going to scream and rip higher, most likely. And I'm wrong on that here. If this, I guess, goes back into the cloud and or above the cloud. Currently we're bearish. The cloud is neutral. Above the cloud is bullish. So the current expectation is bearish continuation. These are a little out of order, but here's the 32,000, sorry, TKC clamp on Bitcoin on the daily. I like that it's knocking on resistance here over and over and over again. And the yearly pivot, I didn't mention that. And another way to analyze this is with alligator fractal stuff. Alligator is still bullish on the daily for Bitcoin. And you can see the trailing stop getting higher and higher slowly. So again, 36.7 is definitely, by many measures, the trailing stop loss level for Bitcoin. Now to Solana, which probably deserves being talked about first because it had led the market, had a massive move over the past month. I keep saying I'm waiting on the street drives and or head and shoulders to figure out what it's going to do with its life when it grows up. That's still the case. Anything above 61 and it's probably go time, just based on that. I don't know if I'm going to get mid 40s there. Based on the 8-hour Bollinger Bands, it does look like we're starting to break up very slowly on the Bollinger Bands. They've stopped contracting and are starting to expand. And again, with alligator fractal stuff, this would be the first candle above the previous resistance fractal and a bullish cross on the alligator. So that alone is worth a stab at a long entry at this point. So it does look decently okay for higher highs. Link, just like everything else, you know, everything for the most part that's gone up has lost momentum over the past couple weeks. And when that happens, you get this TKC clamp. This call for mean reversion is basically what it is. For Link, it's somewhere around 12. So you can see your downside here on everything on the daily, right? Bitcoin is 32, upside arguably is 42 based on weekly cloud. For Link, downside is 12, upside is, I don't know, eventually 30, right? Hopefully together that helps paint the picture, at least for me. You know, is this worth a long here? I don't know. What does the risk reward look like, right? Link's 12-hour alligator fractal, pretty noisy, not exactly, you know, I don't see anything here. Maybe you could argue some sort of inverted head and shoulders, but I just think it's been you know, holiday chop and then some. Technicals just starting to lean bullish again. 12-hour B bands still not expanding. So any higher highs here probably valid for a long. So that would be what, 15, something like that. And then you'd have to measure the size of this consolidation just higher. We'll call it 18 to 20 potentially as a target. RUNE looks like something that you'd expect if you're bullish Solana or Link, right? It's reconsolidated here at the yearly pivot, starting to break up again. This may eventually print a mega head and shoulders, right? Just something to watch out for towards the end of the year. But in the moment, this looks okay for continuation. You can clearly see that C-clamp starting to form there with the support at 410. But you're most at risk for mean reversion when both the Tenkan and the Kijun have been flat for a considerable amount of time. So that isn't the case for RUNE. And then we can check RUNE on the 4-hour cloud. Bullish TK recross there, the red and the blue lines with price above cloud. So there's plenty of decent evidence that this has consolidated long enough. It actually tried to break down with the head and shoulders here and didn't. So I also like this at this point with a stab higher. AVAX, just to contrast, does not have that bullish TK cross yet, but very similar, right? It had a breakout, rode the trend, Now it's reconsolidating and trying to make a decision whether or not it wants to go higher. It looks like it does because everything looks like it does, but I'm just trying to illustrate, between multiple time frames, Bollinger Bands, alligator fractal, cloud, chart patterns, all this stuff sort of tells you the same thing. Everything's sort of correlated together. The question is just which is going to be a first mover here, I think. But so far, so good as far as the reconsolidation. Here's the AVAX mean reversion target, which would be 16 based on the Kijun down there. Now, this is up, 84% in 30 days or something, but it's definitely still leaning more bullish than bearish. Half the battle here is not necessarily fundamentals, although we can argue something like a DYDX token unlock, right? Something like that is super, super bearish. You have to watch out for that. You have to watch out for the regulatory risk, like I was talking about with BNB or any exchange delistings in the United States. For example, let's say they delist Cardano or something, right? Dodge that, obviously. But for me, the most important part is just what do the technicals look like here, right? Uni had been in the dumpster bin, left for dead, has pulled up quite nicely, probably thanks to everything else. This isn't some massive rubber stamp of approval on Uni, the token, or the exchange. But this isn't Adam and Eve on the weekly. There's a massive edge-to-edge, what is that, a 2x from here? So just having a setup is probably at this point good enough. The bigger question is whether or not these outperform BTC over an extended period of time, which they may. Do they outperform ETH over an extended period of time, which they may, really within the next 1 to 2 years? And specifically with DeFi, is DeFi just going to get regulated to death, which is very possible. This is ADA, which, look, I don't like this chain. I don't like Charles Hoskinson. I don't like anything about it. I don't think it has users. I don't think it has no numbers behind it. Zero. Okay. This is purely technicals. This is the type of setup that looks great because you had your drawdown, you had your consolidation, and now it's getting ready to make a decision. Is there enough juice here for a trend reversal attempt, which would be, that edge-to-edge play? For Uni, for ADA, I think it's a little too early. Obviously, you want price in the cloud, and there's really no guarantee that we get to 169 in ADA's case, but that's the target, right? That's what the technicals say. So for anything right now that I'd be playing on the alts side, I would definitely want a pretty decent setup. Atom's another one that we're not there yet, right? This cookie's still baking in the oven. We need to, as I'm always going back to food, we need to let this one play out still for me, at least on the weekly. Let's see what this looks like into 2024. And you may be a community member of one of these coins or rooting for the chain. I get it, but from a trading perspective, it is better if everything moves separately because then you just get more at bats, right? You can rotate your sole profits into ADA or Uni now or in 2 months, and then in 6 months you can rotate into Atom, right? I don't think that's how it's going to end up playing out, but it might. And from a trading perspective, that's what you're looking for. Doge is another one. I think it's just too early. The setup is decent. It's decently okay. But again, who's trading this? Does retail really have money? Maybe. Is it illiquid enough to hit 20 cents? Maybe. Is that going to end up outperforming Bitcoin and ETH? Maybe, right? But I don't think those are questions worth asking and thinking about. Now, as far as like allocations and trades and like, what am I doing? Back in 2019, in December, which was about where we are now relative to having at that time, I put together this altcoin portfolio, and this was what it looked like at that time. These were all real trades that I took mainly through Kraken and Coinbase. I don't know if any of these were in DeFi necessarily, but you can see how interesting this list was. And I don't know what the end result was because BNC dropped the portfolio tracker tool, but my last tweet on this was June 2020. And I think what happened was at some point I started rotating most of this into VTC. I would have to check the actual transactions. Anyway, the point is, for my style, I want to identify 10 to 20 alts, no Bitcoin, no ETH, look basically just on TA. And the goal here is 5, 10x. I don't know. I think more than 5 to 10x is probably greedy, but we'll take it. And then you can size this however you want. If you're in 20 alts, I wouldn't use like $1,000 portfolio, right? I think the fees would just eat you alive at that point. But that other portfolio was 10K. Some of these can go to zero, right? We can look at what happened. Raven coin didn't go to zero at that time, but it was down heavy, right? Atom was down, Algo, those were down significantly. And really the goal is to smooth out the duds by just hitting grand slams on a bigger portion of the portfolio. ETH definitely helped in that regard. So if we look at how we might do this now, this is just an example. Identify sectors you like, identify market cap levels you like, right? If you want to riskier portfolio, you might want to be focused on the low cap gems, right? Versus the higher cap stuff. I like risk, but I don't like delisting risk. So I would, for me personally, avoid the lower stuff. But that's an example of how you might construct it. And then I was just thinking, of all this stuff. Just brainstorm for yourself the coins you like, what narratives and risks you're looking for, where you're actually going to trade this thing. For me, ideally, it's in centralized exchanges, just because then I don't have to deal with DeFi nonsense. For Coinbase specifically, you have access to USDC yield, which is valuable while some of the bucket of money is potentially sitting in cash. Then it's a good idea to take the lay of the land and just see what else is out there. What are you going to benchmark this against? If you're not going to beat BTC or ETH, what's the point? I don't really care about beating the S&P or the NASDAQ. I think that's going to be easy to do. I think it's going to be easy or should be automatic that you're beating the risk-free rate of the US Treasury. And something else to look at, CoinDesk has a bunch of indices, and the DeFi Pulse Index is another one. There's some coins I just don't want to touch. And then the previous portfolio was like equal weighted and was rebalanced based on TA, but you may also want to rebalance based on a time component, every month, or rebalance based on sector or market cap, right? Just as an idea. What you really want to avoid, in my opinion, is selling winners and rebalancing into losers, right? That's what ARK is doing right now with ARKW. They sold a bunch of coin and bought a bunch of Robinhood. I think that is generally a terrible idea, okay? But I get it. If you've got risk limits, that's what you have to do. Anyway, so what I'm looking for is stuff like this, right? I'm looking for massive weekly edge-to-edge clouds on anything that includes Zcash, which also has a potential move here. Zcash actually looks better from a technical perspective than many other coins do. I don't know if this will actually play out, but you're getting that TK cross close to that weekly cloud. You can see Solana and Link have already moved. Those have already allocated into taking trades from whatever. The next step for me and the portfolio would be, what else do I pick up, right? Aave as well, I have some of. So one way to do this is with a screener. So if you know of an Ichimoku screener that I can edit the cloud settings, which I can't do on TradingView, let me know. But that's the general idea. And the reason for that mainly is because you're looking for stuff that has a huge risk reward potential. A few streams ago, I think I talked about GME. We were talking about this divergence and this falling wedge. And, this is the type of chart where stuff happens. And stuff happened over the past couple days on GME. But this is kind of the equivalent for alts. Like the business side of it is a dumpster fire and doesn't make sense and shouldn't exist, right? Whatever. But it doesn't matter. We're just talking about technicals. Another example that I saw over the past week is the Argentina ETF, ARGT. You always get a bigger move in price when technicals match fundamentals. Now we can argue about alt fundamentals, but the point is here, Argentina got an extremely libertarian president in the latest election, which the market took as a bullish nod for the country. It had an inverted head and shoulders. It had a 200-day moving average right there. So there was a lot of technical evidence that this thing was ready to break out. And that's what happened and then some. So this is kind of what we're looking at for alts, right? If anything picks up some sort of narrative for any reason, we want to be pre-exposed to that and ready to sell into strength as people are finding out what this stuff is, right? You can also add this to watch list. This is sentiment. So ideally you do have some sort of watch list running of things you're looking at, whether it's Coin360 or something like this. You can implement on-chain data, which I do once I figure out the list. And I was also planning on tracking it. This is Crypto Compare. This is the best public tracker that I can find. There might be better ones, but anyway, when I have this up and running, hopefully next week, just the list at the very least, it'll give people something to something to look at and chew on as far as what I'm doing or about to do, because it feels like it's about that time. It's about that time. We're pre-halving, alts are coming back, we're pre-ETF. Some of these charts look pretty good. I'm happy with my personal Bitcoin allocation. The risk reward setups look pretty good for some of these alts. So I think that's where we're at broadly. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.